Poland's central bank cut its interest rate to 2%. I'm joined on the line by Adam Czerniak from Polityka Insight. Adam, is this cut bigger than you expected, and do you think there will be more cuts to follow?
The cut of the central bank was unexpected, really. Majority of market economists, me included, expected a smaller cut by 25 basic points to 2.25% for the reference rate. So this was quite a surprising decision. Furthermore, this is not the only surprise that the central bank made during this month's meeting, because they also decided to decrease the Lombard rate, the credit rate of the National Bank of Poland, by 100 basis points, from 4% to 3%. This is a very important decision because due to Polish law, the highest possible interest rate is charged by banks on consumption credits is 4 times as big as the Lombard rate. So by this decision, they decreased the highest interest rate that banks can charge on consumers by 4 percentage points. That's a very big decrease. So they made, in fact, 2 important decisions. One of them was the cut of the interest rate by 50 basis points, and the second one was the reduction of the Lombard rate by 100 basis points. Why so, and why is this so important, this decision? Because they were focused on decreasing the cost of credit to the Polish economy, especially the cost of consumer credit. And it's very important for the majority of MPC members in Poland, because they would like to boost the Polish consumption, which is growing, but still at a quite lower rate than in the recent years. So by reducing the Lombard rate and hence reducing interest rates charged by banks on consumer credits, they would like to boost Polish consumption, especially through more credits. Regarding the future, because that was the second part of your question, I see some more cuts coming in the next month and the next couple of months, really, because in November the Polish MPC board will see its new inflation projections. These inflation projections will show lower GDP growth, most likely a slowdown even in the Polish GDP growth, and also they will see a lower inflation path in the forthcoming years, so that inflation will be subdued until at least 2016 in the projection they will see next month. And I expect that this new macroeconomic projections of the National Bank of Poland will be an argument for the MPC to cut interest rates further, but not more than 25 basis points in November. So they will cut interest rates by 25 basis points in November, and probably there will be another cut interest rates somewhere between December and January. So in the end, I expect that the interest rate will be about 1.5% in 2015.
And Adam, Poland's new Prime Minister Ewa Kopacz has promised to boost support for families. Another goal of her cabinet is to protect the coal industry against any unfair competition and regain profitability. Now, Adam, do you think she will accomplish these goals?
The first goal, I think there will be some new instruments introduced by the government in 2015 and 2016, especially tax reductions for large families, which should encourage people to have more children. However, I do not think that this will help a lot to increase the fertility in Poland, but it will be for sure a boost for consumption in 2015 and 2016. However, I see a lot of problems with the coal industry because the situation in the coal industry depends much more on the situation of the global coal market and the prices of coal and the availability for Poland of imports of foreign coal that is much cheaper than the coal that's mined by Polish miners. So in that case, I do expect that those instruments that Ewa Kopacz plan to introduce won't help a lot. We need to restructure the Polish coal mining industry and probably just shut down some coal mines which are just making losses for a couple of months recently.
Adam, thank you very much. Well, viewers, do stay tuned as we have plenty more just like this heading your way. See you very soon.